Taxes. Hello, sister, sister. I got my own mind. Ding, 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 ding. Man, no, 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 that to do what I got to do. Ow, 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 ow. Hello, hello, hello. Happy band until you lit. Hey, hey. Oh, you know what? This time I gotta make sure my phone is on Do Not Disturb because my mom loves to like, hey Wadlin, Wadlin muelo pa mon telephone na. That's how she sounds to y'all. But yes, it's Financial Lit Tuesday. Um, Let me get this popping on the Instagram so we could. Hey, what's popping? Brand new wit just happened. Yeah. Okay. All right. Coolio, coolio, coolio. All right, let me get this on here. This little tripod situation. Oof. Okay. There we go. Hello, everyone. Happy. Oh, I've been got my uh glasses on. Happy Financially Lit Tuesday. Back at it again. Back at it again. So today I'll be talking about five types of business taxes because I've gotten in the past couple of weeks I've gotten quite a few questions as far as like business taxes. A few of my clients even hit me up like, "Whoa, Department of Revenue coming for me. IRS wrote me. What's going on?" So I figured, hey, I'm gonna come on here and talk about it. If you don't have a business, um, I will be discussing employment and income tax as well. So that could be something that you would want to know as well. Or if you're looking to start a business in the future, why not? This is great information to know anyway. Definitely make sure that you're sharing with your friends. Let them know that we are live here with this Financial Lit Tuesday. Um, so I'm just going to get this popping. So to start us off, the five different types is your income tax. So that's your regular taxes that you file at the end of the year. I mean, at the beginning of the next year. So right from January to April, generally, from January to April, you're filing those taxes. As a business owner, you have that. Um, Depending on what type of business structure you have different deadlines as well. I won't go into all that, but you know. So to start us off, I will start with income taxes, of course, per usual. If you have any questions while I'm speaking, definitely feel free to hit me up. Say, yo, Adeline, I don't know what you're talking about. I don't get it. And I'll be sure to, make sure that I clarify so you understand or if you have any questions altogether throughout. Um, and then next week we'll do a Q&A so that y'all can bring your questions and I'll be more strategic about doing that. This week was supposed to be the Q&A, but yeah, yeah, that's okay. That's okay, Tuesday. All right. So let's get popping. Just pulling up my notes here so that I can take a look at it, make sure I am giving y'all the right information. Tuesday. Yeah. Yeah. Where are they? Why am I? Okay. Oh no, did I open the wrong document? Hmm. Steve needs taxes, taxes, taxes. Okay. Um, I sure did open the wrong document. My bad, y'all. Mm. Um. Oh. Okay. All right. My bad. Slight delay. Had to make sure I pull it up. So I started off with income taxes. So if you are and just say, just you yourself, maybe you're following with your family or your children, whether you're following head of household, single, any of that good stuff. You are going on a 1040 tax form. What does that mean? It's just an IRS tax code. It's how they identify that type of tax. So for individual people, they say, "Hey, we're going to put you on a 1040 EZ," which means it's a short form, which like for non-complicated taxes, you go on a cute little short form that's a 1040 EZ. For the like more like, traditionally everybody else, you go on a 1040 form if you're, filing, you're single, married, filing jointly, widower, widow, all that good stuff. Now, when it comes to business, so it really depends on what type of business you are, right? So depending on what type of business you are, it's going to tell you how you're going to file your taxes. Hey, Don. Hey, what's up? Hello, tax brackets. Hey, Autumn. Yes, yes. So depending on what type of entity you are, whether or not you're a sole proprietor, partnership, corporation, S corp, or limited liability company, it's going to tell you when your tax deadline is. And then also it's going to tell you how you're going to file your taxes. Now, generally with LLCs, sole proprietorships, it's a little more like, okay, like cookie cutter. You put it on. You have a Schedule C. Hello, Scorpion King. You put it on a Schedule C, and now you're like, bam, we're lit, right? But for your S corps, your corporations, your partnerships, you do have to file a separate tax return and then get that Schedule K to then go on your personal tax return so that you can actually pay those taxes. Um, so now that I got the right tax document open, so usually your income tax is paid throughout the year. Okay, so for those of you that are that have maybe been getting hit with penalties during tax season because you weren't paying taxes throughout the year, make sure you are paying taxes throughout the year because you will get hit with a penalty, and generally sometimes you can get it waived depending on what happened throughout the year. But if you are, operating, if you have been operating your business for a few years now, you do want to make sure you are making those quarterly tax payments so that you aren't getting hit with those penalties during tax season when you go and file annually. So yes, you file quarterly to actually make those tax payments, and then you file at the end of the year. Well, you file at the beginning of the next year to actually bring those payments together, and then put it all together. Go to your tax professional, go to your accountant at GrandMed Financial, all that good stuff, so that you can make sure that you do that tax filing at the end of the year. And that income tax is based on the earnings or income you've received. So, all your sales throughout the year, if you're a personal, maybe W 2, whatever income you receive throughout the year, 1099, you are going to put on that income tax form. If you are a 1099 and you say, "Hey, I want to make quarterly tax payments so that I don't have a huge bill at the end of the year," do it. Literally go on irs.gov/payments and go ahead and make your quarterly tax payments, because at the end of the year, a lot of people expect a refund. But a refund is not for everybody. So depending on what you've done throughout the year, sometimes you can't get a refund because you didn't pay any taxes. What is there to refund? There's nothing to refund. It's really so that's what you're filing for at the end of the year. Whether you is filing to see whether you paid too much during the year, and here you paid too much, or here we gave you a tax credit and it offset the amount that you owed, or hey, you owe. So that's what's actually happening when you file your income taxes. Um, and then if you don't pay your taxes by withholding it through your W 2 or whichever way you choose to withhold it, or you don't pay enough, then you're going to have to pay at the end of that annual filing, when taxes are due, either April 15th and March 15th, whatever the case may be, depending on your entity structure. So that's really what it is for income taxes. It's really as far as like that's like a mild explanation of what the income taxes is. I brought my water this time, y'all, because I be thirsty. I be so thirsty. Gotta stay hydrated. Hello. A gallon a day. All right. So, and then we have our estimated tax payments. So our estimated tax payments, these are like, hey, these get paid throughout the year for the most part. So whether it's self-employment or it's based on the amount of withholdings you are wanting to take out, that's what your estimated tax payments are really going to be. So it's like, hey, those federal withholdings, that's basically an estimated tax payment because they're kind of saying, okay, um, they receive this amount of money. We're just going to put some numbers in here and take out this amount of money for taxes. But we don't actually know exactly how much they're going to owe in taxes because we don't know the entire income for the year. So what they do is they kind of put in a formula to kind of say, hey, this is what we're going to take out for now, and then if it comes out short or we took out too much, then we'll kind of correct it during the annual income tax filing. So the estimated tax payments is what's happening throughout the year. So your estimated tax payments, they're really used to like keep in mind as far as like self-employment tax or alternative minimum tax, depending on how much money you're bringing in, all that good stuff. And then if you're considered like self-employed, you do want to make sure that you are uh, you're keeping up with those taxes as well, because a lot of the times you get hit with that self-employment tax at the end of when it's time to do your filing your taxes at the end of the year, and you're like, whoa, like I didn't know I was going to be hit with so much, from being self-employed. But because you have to pay that employer portion and yourself portion of the tax payment, so you do got to make sure that like you're taking those into account. um So we have our self-employment tax. So your self-employment tax generally has to do with that. Hey, Adal. Hey, I mean Tino. Hey, Tino. Hopefully I said that right. um, yeah, and you also don't want to run into a penalty. So the penalties, as far as like that underpayment of estimated tax payments, they get kind of up there. So you do want to make sure that you're not getting penalized. They can, and then on top of the penalties, they do charge interest. So it can really add up very quickly. So definitely making sure that you're taking care of it. You're making those estimated tax payments throughout the year to take into account any self-employment income that you may have received through your that 1099, or if you're operating your business on your own. Uh, so generally, those that don't have to pay estimated tax payments are people that don't have that generally don't have any tax liabilities for in the previous year. So if last year they didn't have a tax liability, they actually received the refund, they're doing good. You don't have to really make estimated tax payments. You're fine. Also, if you were oh, you would also have to be, here for the entire year, of course, in the United States. Because if you weren't here throughout the year, then it shows that you didn't know you can actually have it wavered, that penalty wavered, because of that fluctuation of income and how you would have received pay. Um, what else as far as estimated tax payments? So here's an example I wrote down. So if you are expected to owe a tax of $1,000 or more, or then you'll have to make an estimated tax payment when you file. So if you're like, hey, if at the end of the year they see like you owe $7,000, they're gonna be like, yo, why didn't you make any estimated tax payments throughout the year? And then you have to write out basically explaining, oh no, this and this happened, and hope that they waive the penalty. If you are a corporation and you owe at least $500 in taxes, then you have to make estimated tax payments throughout the year as well. So those are the two basically guidelines. If you're personal or individual, 1,000 for a business. I mean, for a corporation, then it's 500. Um, yeah. What else? And then that would go on. So if you're filing individuals, filing that 1040, or if you're filing a S corp or partnership tax return, it's that 1,000. And then for self-employment tax, let me know if you have any questions, by the way. I know I'm kind of moving through them. Now for self-employment tax, what is self-employment tax, right? Self-employment tax is generally that Social Security and Medicare tax. Right now, we're in a point where they're allowing employers to not remove Social Security taxes from the employees and not needing to pay them right now. But they will become due in the first quarter of next year. So some people they're like, oh yeah, my check is higher. I don't need to pay my Social Security tax right now. But then in that first quarter of the year, when all those tax payments become due, it's gonna be a hit. So I'm like, oh, I thought I was living my best life, but not really. So that employment tax, which is that Social Security and Medicare. Social Security is the 12.44%, which includes the employer and the employee portion. So whatever you're paying that employee, you can just like write off really 15.3%, right? Because you're not even going to see that amount because it has to go portion for the employee, portion for the employer. So, but really it's 6.2% for each of you. 6.2% for Social Security. Medicare is that 1.45. And that's for the employee, that's needed from the employer and the employee. In total, that's 2.9%. Independent contractors, you have to pay both portions, which is that total 15.3, because you are now your own employer and you're the employee. So you have to do that, the 15.3% to account for those two halves. Um, and you're subjected to paying self-employment tax if you earn more than $400. Anything over $400, you had to pay self-employment tax. Okay. Or if you had like a church employee, or if you were a church employee, then it's $108 or more. Then you have to do that self-employment, right? And we have employment taxes. So I know it kind of like seems similar, but trust me, they're different. So one is that self-employment tax is Social Security and Medicare. Employment tax is everything else. It's FICA, right? What you would hear as being FICA, or is the federal income tax for the state and federal. Generally, it includes unemployment and then that federal withholding. So all those federal tax payments, which includes that. So the FICA includes the, like I said, unemployment tax, all that good stuff. So based on how much you paid the employee, that tax has to come out. I know it seems like, oh my gosh, like taxes, like they tax on everything, because they do, like they really do. Like taxes come out for literally everything. That's why it's very important to have a knowledgeable tax professional to make sure that you're not overpaying when you don't have to. Because like there is so I mean I've been doing taxes for 10 years now, almost 10 years, and there is still things that I'm learning, and there's still tax codes that change all the time. That's why it's very important to continue to learn about new tax codes, things that have changed in the tax world, and also making sure that you have a knowledgeable tax professional to really help you out. Because if you're overpaying in taxes, it's really unnecessary. That's money that you can be putting back in your pocket. Um, because you literally tax on everything. And on the individual basis, we're just going over business taxes. On the individual basis, the tax list is super long. I think there is like there's probably like 15 different types of taxes on an individual basis. Like there's a lot. And I think, and that's like the main ones, because you tax when you die, you tax while living, you tax while sleeping. But yes, I digress. Anywho, so we have our employment tax, which is the Social Security, federal income tax withholding, and that federal unemployment, federal and state unemployment. Uh, the Did I go over? Okay, okay. And then the last tax I'm gonna go over is your um uh exercise tax, or sales tax. I'll just go over sales tax because that's generally what people are paying for. Paying their but it can go in depth. As far as paying sales tax, really it's based on the amount of income that you receive. And generally you're charging that to the consumer anyway. So that money that you're charging to the consumer, that's 7% if you're in the state of Florida, North Florida, that 7% that you're charging to the customer, make sure that you're putting that money to the side, because you are going to have to pay that money back to the state and government. So you do want to make sure, like when it comes to sales tax, you're doing that. In other states, it gets a little crazy. I mean, Florida probably has like one of the simpler uh, tax laws, but if you don't, if it's something that you want to make sure that gets done, and that you don't have to worry about, really get a tax professional again to make sure that your sales tax is paid on time, avoid penalties, and also that it's filed correctly. Depending on what type of business you are, it can get complicated. It can be very simple, but it can be very complicated as well. So you do want to make sure that you are going to the right professional, Grand Financial, of course. Then you're calling up Grandnet Financial to make sure your sales tax is filed on time. We do a annual payment, so you just pay for one time for the entire year, and we don't even bother you. We just, if you have a database where your sales come in through, we just go into the database, pull your sale report, and then go ahead and run the sales tax payment. As simple as that. Every quarter or every month, depending on what kind of business you are. Um, but definitely make sure that you are making those sales tax payments. Don't, if the Department of Revenue contacted you and if they're like, "Yo, we haven't received our tax payment, like what's going on," then you want to make sure that you get it paid right then and there. Hey, Brianna, as soon as possible, because you want to avoid those penalties. On top of those penalties, they do love taking interest. So look, more money, keep more money in your pocket and avoid that, and just hire Grandma Financial, right? Um, yes. So that's generally, I did want to make sure I touched on those types of taxes so that y'all are aware. Of course, this will be this video will be available on our YouTube channel, Sipping Wealth, uh, along with all the other videos, really to make sure that y'all are knowledgeable about things that are going on in the business world, and that you're self-sufficient as well. Of course, I would love you all to come and pour it into Grand Financial, and get the assistance that you need. Absolutely. But I also want to make sure that you all understand exactly what we're doing for you, and also how to maneuver in the world of business as well, and how to talk about these things, how to have that conversation, understand what the heck is going on. Because this is things that every business owner needs to know. There's not a business owner that is exempt from these five types of taxes, literally. So you do want to make sure, I do want to make sure that you're knowledgeable. Let me know if you have any questions. So I spent the better half of this Not even the half. The whole thing rambling. Let me know if you have questions. What's good? Because I know I am excited about the new tax season. Um, Definitely, Grandma, got some things in store for you all. Also, we are doing a workshop in two workshops in October, the beginning of October. So the information will be out soon. So definitely make sure that you are in attendance for the workshops, because we're going to go over a lot of information, the step by step, the play by play, the autogens will be dropped on those two workshop sessions. And make sure I go and check. Make sure I am hitting on everybody's questions. What just happened? Okay. Yeah, I think we're good. If y'all have any questions outside of this, definitely make sure y'all reach out to GrandMet Financial. Check out our website, our amazing website that is also getting updated by ADQM Solutions soon. So definitely check out the new updates to our website. I'm excited. And we also have a new assistant. If you are a GrandMet Financial client, then you probably already heard from her. Jasserie, she's absolutely amazing and will be posted on the GrandMet Financial pages soon to introduce her to the world. And we are so happy to have her on board. So it is, we're a pretty solid team. Brianna and I have been holding it down, doing the thing. We have ADQM on the marketing solutions and all that good stuff. And then we have Jasserie on board. And definitely excited for things in store at GrandMet Financial. But yes, if y'all have any questions outside of this, feel free to reach out. Check us again next Tuesday for Financially Lit Tuesday. And we will go ahead and promote a Q&A for next Tuesday. And I'm make sure I write it down. Because this was supposed to be a Q&A and I totally clicked up. But yes, if y'all have any questions, let me know. Y'all have a beautiful night and stay lit. Every day we hit, yeah.